Yardeni of Yardeni Research is optimistic, writing, "We tend to be perma-bulls because there are so many more perma-bears. We focus on the positives and frequently find them to be more compelling than the negatives." Ed joins us now for more. Ed, welcome to the programme, sir. Let's talk about these tariffs first up. The tariffs themselves and the threats look very similar to what we heard on April 2nd, but the price action is so different, Ed. What explains that?
Well, Liberation 2 is, been there, done that. That's really what's going on here, is the market figures this, as you folks said, this is, the art of the deal. It's negotiations. Let's not forget that Trump's background is commercial real estate and residential real estate in New York City, and they do a lot of negotiating there between other developers and politicians and labor unions, and they scream and they shout. But all that happens, all that bullying and negotiating occurs behind closed doors. Trump has taken this to another level, and to a global level of negotiating publicly with leaders around the world on trade. So it's not a pretty thing to watch, but I think the markets have figured out that this is going to get resolved in the next few months. It has to be, because otherwise Trump's going to really risk losing the midterm elections for the Republican Party, and that's not going to be good.
What if it doesn't, Ed? What if it isn't resolved? How do you think markets handle an extended period of ambiguity? And what would you expect corporations to tell us in the upcoming earnings season?
Well, I think, first of all, when it comes to all this impact on the United States, so far it's been remarkable. The resilience of the economy has been absolutely remarkable. I've been in the resilient camp, and I'm in awe at how well the economy is hanging in there, how well consumer spending has been hanging in there. And I'm also in awe about inflation. Inflation really hasn't picked up. Some of the indicators for July suggest that it's actually going to be pretty close to zero during that month. It's a little early in the month, but there is sort of a nowcast for that. So all in all, I think the U.S. stock market is doing what it's supposed to do. It's supposed to take the long view, and the long view is still quite optimistic, I think, with the technology revolution we're in, the digital revolution we're in, and likely to continue to have very positive impacts on the U.S. economy and productivity.
For a perma-bull, your recent note was pretty bearish, and it really focused in on the labor market and the fact that private industry payrolls rose only 74,000, which was the lowest in your data going back to 2004. And this points to something happening under the hood that isn't the sort of equilibrium that can keep on going for a longer period of time. Why do you stay bullish, even with that factor?
Well, to maintain my credibility, I do make sure to constantly write about what the bears are saying. And I was actually a little surprised that there wasn't more bearishness for the economy anyways, and the stock market, about the employment numbers that came out on Thursday. And they were weak. When you take out government employment, and a lot of that was education employment, maybe we're hiring a lot of teachers and getting them ready for the new school year. Maybe the schools have been overwhelmed with kids of migrant workers, and so they've had to load up. So maybe that's a real number. But take out government employment, and we're up only a little over 70,000 in non-farm payrolls. So I did point all that out, but then I put a positive spin on it and concluded, this is the economy has been stress tested by tariff ban, by all this tariff turmoil that we've had, and yet it's passing the tests. The banks have passed the tests, and so I kind of stick with the data, and the data on balance, I think, suggests that we probably will see some better employment numbers and a better economic growth in the second half of the year.